Hello and welcome to an exclusive webinar by ICICI Security on why one needs to add small cap funds to your portfolio. Joining us on the show today is Mr. Chirag Setalvad, Senior Fund Manager, Equity, HDFC Mutual Fund. Thanks, Chirag, for joining us today on the show. Chirag, the year gone by has seen a dream run for mid and small cap companies. Is liquidity the only driving factor, or are the markets giving a very different signal? And really, are fundamentals also supporting the fact that India Inc. earnings are over the impact of the pandemic?
Thank you, Samina. So I think a few things to keep in mind. The first is, the market has rallied more than 120, 130% in the last 1 year when you look at mid caps and small caps. So I think investors are getting spooked by that number and are focusing on that. But what you have to keep in mind is the 2 years prior to that, these indices were down almost 50%. So after falling 50%, they've risen 130%. So I think it's important to keep that in context. And the second is it's relevant to look at the long-term returns in these indices. And the small cap index and the mid cap index have given a return of about 11-12% when you look at it from a 10-year perspective. So while the 1 year return has been fantastic, the 10-year return has really been in line with what, in fact, maybe slightly below what you would expect in the mid cap and small cap category. So I think we should not get swayed too much just by the near-term returns, but look at it from an extended time horizon. So I think that's important. The second is, of course, this is a combination of both liquidity as well as fundamentals. It's unusual for a market to move up only on liquidity or only on fundamentals. That usually walk in hand in hand. So it's a little bit of both. Of course, liquidity has played an important role. Global liquidity, domestic liquidity have both fueled this enthusiasm in the market. So that clearly has been a factor. But at the same time, I think fundamentals has been also very supportive. So despite last year being a year which was impacted by COVID, actually companies came out with very, very strong performances. Revenue surprised positively, margins surprised positively, and free cash flow generation was also very strong. So I think a combination of both these factors have driven the market. So I think ascribing it to one and not the other is not fair. So I think it's a combination of these two. But I think the key number to focus on is that the 10-year return is still 11% for the small cap index and 12% for the mid cap index. And those are not terribly worrisome numbers.
Right. Chirag, markets are at levels where investors are slightly uncomfortable and are awaiting a correction on one hand. And on the other hand, the market is also betting on an expectation of a good earnings recovery. Can both these things happen simultaneously, growth in earnings and a market correction?
Sure, of course. The markets have rallied sharply. And whenever a market rallies sharply, the P multiples move up. And, if these multiples were to come down, if it's a combination of earnings growth as well as prices coming down, then that kind of correction is a little bit more stable, right? So you want to see a little bit of a time correction and a little bit of price correction, because that kind of correction is a little bit easier to absorb as opposed to one which is only led by prices. So I think, of course, you'll see substantial earnings growth in the years to come. And if that is accompanied with a fall in prices, then all of a sudden the P's can contract quite a bit over a period of time. So I think both are possible, certainly.
Chirag, what about commodity inflation? Is that really a cause of worry when it comes to mid-cap stocks or mid-cap companies for that matter?
No, I think it's a worry for all stocks. I don't see why we have to, isolate mid-caps or small caps. All companies get impacted by commodity inflation. And your ability to pass it on to the consumer depends on the strength of the business, depends on the nature of the business, the nature of the industry, and so on. So some people are more price takers and some people are more price givers. And that is agnostic to the size of the business. So there'll be some large cap companies which will struggle in an inflationary environment such as the present one, and some which will do better. And similarly in mid caps and small caps. So I think it's unfair to say that mid caps and small caps will be more affected by inflation than their large cap counterparts. So, if you're a business which is B2B, which you have pricing power, and if you have strong management and you have various levers to pass on this inflation to the consumer or bring about efficiencies, then you'll do fine. And this can be large cap, mid cap, or small cap. So I think it's a misinterpretation or a misconception that mid caps will be impacted more by inflation. I don't think that's the case.
Right. Chirag, in your fund specifically, you've taken a higher exposure to NBFCs as compared to your peers. Post the second wave, investors are concerned that these companies might see deterioration of asset quality. Do you see this as an impact in terms of the second COVID wave on these stocks and hence on your fund performance?
So actually, we are neutral weight. We don't have a significant overweight. We have the index has roughly 5% in lending in BFCs, and we are actually 5% as well. So we are neutral weight. We are actually underweight some of the non-lending NBFCs. So NBFCs such as those which are market-related, the asset management companies, and some of the others market-related business. We are actually a little bit underweight. So it won't impact us disproportionately. I think that's the first part. The second is, of course, in this second wave of COVID, there will be an impact on NBFCs. I think that is certainly likely to happen, and that will be accentuated by the fact that there is not as much support by the RBI and the government as there was in the first wave. So I think that is to be expected. I think the question to be asked is it in the price, right? So the impact will happen, but if it's more than compensated by the prices that you're paying for these businesses, then you're okay. And if it's, the impact is more than what we anticipated, then we'll be in trouble. And if the price is not adequately factoring it in, then we'll be in trouble. But I think you have to look at this from a long-term perspective. You have to look beyond COVID because this too will pass. And you have to look at earnings from an asset quality at a normalized level. You can't look at and factor in what it looks like during a crisis. So you have to look at it from a normalized perspective. And when you look at it on that basis, I think we are okay. And we have a neutral weight. So in that sense, we don't get disproportionately impacted.
Chirag, you're managing the highest AUM fund in the mid-cap space, and the performance of the fund has also moderated over the last couple of years, right? Is the large AUM size acting as a deterrent in terms of taking sizable bets on the mid and the small cap companies and hence limiting the ability of outperformance against your smaller counterparts in the industry?
Not at all. I think despite us having a large size, I think we've managed that size quite well. So when you look at the weighted average market cap of the companies that we invest in, it's still quite reasonable compared to peers. So we are roughly at about, I think our number is about 25,000. And when you look at the average for peers, it's closer to 35,000. So we are actually, despite having grown to a large fund, we are not gravitating to larger businesses. We are still investing in mid caps and in small caps. So fund size becomes an issue if you, one, over diversify, or two, get into larger companies. And we have done neither. Our number of companies remains the same roughly. We invest in between 60 to 70 companies, and that's remained consistent. The average size of company that we invest in is also consistently remained either near the market or below the market. So we are not getting into from mid caps towards large caps and mega caps and so on. We have stayed true to mid caps and small caps. And in fact, like I said, compared to the peers, we have actually been our market cap is weighted average market cap is lower, which means that we are more true to a mid cap fund and a small cap fund than funds which are in AUM much smaller than us. So we've not exhibited any style drift. So I think the size is certainly manageable.
Chirag, while the markets are at a record high, there's a lot of talk about how the next leg of action is really going to come in from stock-specific or company-specific sort of action. How crucial do you think is a portfolio skewed towards small-cap stocks important? And what I'm really trying to understand is, while the index may not see too much of an up move, it's going to be the small and the mid-cap space that might carry the weight of the market in the next leg. Do you agree?
Absolutely. I think, every portfolio needs an allocation to large, mid, and small, right? Because at different points of the market, different parts of the market will do well. So there's some times when obviously large caps do better and others when mid caps and small caps do better. So it's important for an investor's portfolio to be adequately exposed to all of these categories, because if you're only large cap, sometimes you'll do well and sometimes you won't. And similarly in mid cap and small cap. So it's, I think, very important to have that diversification. That's the first part. I think the second part is, as you pointed out, that while the indices may not necessarily do well, stock picking can add a lot of value. So obviously small caps and mid caps are less researched. There's a lot more value that we can add as fund managers, and the alpha generation potential is quite significant. So most funds have, 20 to 30% overlap to the index. In our case, it's roughly around 20% odd. So 80% is an off-index bet. And in that sense, the fund can perform quite differently from what the index can perform and can add value over a period of time. So I think stock picking is very important. India has 3,000 companies which are listed, more than 1,000 plus small cap companies. I think the universe to pick from in small caps is very, very large. In a lot of industries, you only get an exposure in small caps. You don't get these exposures in mid cap or large cap companies. And these are businesses which are small, which can grow quite significantly over a period of time, and where management plays a key role in growing that business. So I think all of that, I think the future for small caps over an extended time frame is extremely positive. Now, of course, in any given year can be a challenge for large cap, mid cap, for the overall market. And of course, that can happen. But I think investors, when looking at equities in any case, should have a long-term horizon. You should be investing from a 5-year, 10-year perspective. So when you have that kind of horizon, the volatility sort of gets managed. And when you have that kind of horizon, I think investing in small caps and mid caps can be quite rewarding.
Right. Of course, small cap stocks of today potentially could be large cap stocks of tomorrow. But also,
Absolutely.
very lastly, keeping, of course, this is going to be different for different customers and client base, but keeping an average risk profile in mind, what is the sort of allocation you would be advising to investors towards the small cap space?
It depends, like you said, on each investor's profile, the time horizon, risk appetite, and so on. But I think, roughly having a, 60 odd percent in large caps and 20% in mid cap, small caps, roughly, it's it's a very broad number. Yeah. Within the equity mix, I think is something which makes sense. And then, of course, I think it's important not only to have that mix, but also to look at it a little bit dynamically, invest on a systematic basis. So you keep investing in all market environments. And as and when the market corrects, because the market will correct. Well, we're not just talking about this market, but all markets correct at any given point of time. So in those market corrections, it's important to put money to work. So you try and also do a little bit of lump sum investing, especially during difficult times. And, investments made during tough times tend to be very rewarding investments. So I think that's always worth keeping in mind. And especially for mid caps and small caps, which tend to correct more during large market corrections, they also tend to bounce back much sharper. So I think that's important to keep in mind.
Right. Thank you for that, Chirag, helping us understand why it's important to have exposure to the small cap space. And like we said, companies that are small today are going to be the large cap stocks of the future. So you cannot avoid this, especially if you're investing for the long term. Thanks for joining us, and we'll speak to you soon.
Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.